Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. I was out of University College Dublin, coolest campus in Europe. Yep. Derek Halpenny with us. He is iconic with MUFG. I want to make clear they're a Japanese bank. It's inappropriate for Mr. Halpenny to discuss the executive and intervention processes of the bank. But we're thrilled he could join us, Head of Research, Global Markets EMEA for MUFG. Derek, it's just been way too long. Why is the dollar resilient? Is it about the dollar or is it about everybody else?
I think primarily I would point more recently, obviously, to the shifting expectations about the Fed, higher for longer, the resilience of the data, which certainly by January, February time, the markets were not expecting. So this kind of latest leg stronger is more about the US dollar side. But certainly from our perspective in terms of the forecast going forward, I think it's important to remember the broader economic conditions. And if you're going to be in a position to sell the US dollar, obviously you have to have currencies to buy. And up until now, the global backdrop hasn't been particularly favorable. But we think that's changing, not dramatically, but enough to limit dollar buying. And right. Of course, the GDP data today in the UK is one small example.
Exactly. What is the outcome? And Governor Bailey mentioned in that yesterday. Derek Halpenny, what does it mean for our listeners and viewers on YouTube if we have a stable dollar? I don't think there's enough talk about this, Paul. What if we get a stable dollar forward?
Well, I think probably most central bankers, for a start, would certainly welcome that. And I think, stable foreign exchange generally is indicative of relatively reasonable conditions more broadly in the financial markets. And I think FX stability going forward would obviously probably reflect a relatively coordinated monetary policy approach going forward. And again, I think for broader financial market conditions, FX stability in that context would be welcomed.
So, Derek, give us just kind of your broad overview of what you have seen with the Japanese yen over the last several weeks. Again, we pushed up on that 160 level a couple of weeks ago, really caught people by surprise here. What do you think's going on out there?
Yeah, I think this is really interesting. Like, obviously, the price action last week, I can say that it certainly looks like there was intervention. That's pretty obvious, and I think there's definitely an elevated level of concern, politically at least, in relation to the depreciation of the Japanese yen. That has an impact on household consumption. It has an impact on household sentiment. And there is still a chance that the Kishida administration will push for a general election before the LDP leadership elections in September. Certainly from Kishida's standpoint, having a general election victory, the measure of victory, of course, we can determine and debate, that raises his prospects of remaining leader after the leadership election in September. So I wouldn't rule it out, and certainly politically there's definitely an elevated level of concerns. And of course we've had this meeting this week between Governor Ueda and Prime Minister Kishida. Ueda has then come out, and the BOJ certainly seems a lot more hawkish now today than they were a week ago, and that certainly raises the prospect of a more active BOJ policy stance going forward from here.
So if the US dollar is maybe stabilized, maybe even if there's a little bit of softness in the US dollar, when you talk to your clients, do they have confidence to go out and buy anything else vis-a-vis the dollar? Well, look at Japan, and today we've had data
on cross-border flows and, foreign investor appetite for Japanese equities remains very, very strong. And again, I think if there's a fundamental, compelling story to tell, investors are interested. Notwithstanding the high levels of rates, notwithstanding the very high level of the US dollar, that points to potential volatility ahead. If there's a real fundamental story, that can trump all of that. And I think that's what's going on in Japan at the moment, where clearly corporate Japan is changing, dividend yields are picking up, share buybacks are picking up, focus on return on equity, right. And that is a compelling story in terms of Japanese equities at the moment.
So what is your 6 months out play on yen? Which pair do you take on yen here to make a speculation?
Well, I think in terms of where we've had probable intervention, and given our view in terms of where the rates pricing across G10 is at the moment, and by that I mean there's more pushback on yields to come back down based on our view that the Fed is going to cut 3 times this year. And given the fact that we think the BOJ is going to raise rates in July, possibly on the same day that the Fed is cutting, I do think there's scope there for dollar yen to move certainly back into the 140s, and for there to be a bigger move than maybe what the markets are expecting at the moment.
We got to get you back. That's 20 big figures or 15 big figures. We got to get you back on. Derek Halpenny, thank you so much. From MUFG there on foreign exchange. I'm going to break a rule here, folks. Usually, because they're always so product touchy-feely with Apple, they go to Dan Ives and they go, should I get the brown one or the red one?
Sure.
I don't do that. I do financials and can you make money or lose money in Apple and all that. Right now, I'm going to rip up the script with Daniel Ives. He's with Wedbush on Apple. Dan, Apple Insider, Mark Gurman, any others, they have a lot of paragraphs right now on what AI is going to do for the iPhone. Is it nothing more than a glorified search engine enhancement?
I disagree. I mean, I think this is the start of a game-changing strategy at Apple with AI. And I think it's going to be on AI services as well as on the iPhone. But Tom, they're not putting their new chip to focus on AI if this is just for enhanced search.
Okay, well, what's it for? I mean, right now on a Friday in May, Paul, you mentioned the June meeting is like, Ives goes to that. He wears a tuxedo. You should see the color of that tuxedo. Dan, I think there's a mystery here on what AI is going to mean for the public on the toy they all carry around. Do you agree at least that there's a mystery?
Yeah, but I think the mystery and the popcorn moment, that's going to be revealed at WWDC next month by Cook. I think it's going to start what I really view as probably the most important event for Apple in a decade, because it's unveiling AI on services, what I believe is going to be a new AI app store and the start of it, and then what's going to be built into iPhone 16 from an LLM perspective.
Hey, Dan and Tom, I bumped into Dan at Newark Airport yesterday. I was going up to Boston. He's getting off the red eye from San Francisco. No idea what's going on. He's all over the place.
In Middletown?
He's all over the place. I have no idea.
I mean, the Wedbush Gulf Stream usually doesn't go to
I know. But yeah, he's flying with the people. Hey, Dan, when you talk to investors, what's the biggest challenge here for this stock? I see it down 4% year to date, which for Apple is really, really underperformance. Is it China? Is it AI? How do you prioritize kind of what Apple needs to get right over the next 1 to 2 to 3 years?
Yeah, Paul, it's a great question. Look, I think it's China, because that we're used to seeing that as growth, and it's actually been negative. But if you look out over the next 6-12 months, the headwind becomes a tailwind. I mean, China, I think, starts to grow next few quarters. June will be its last negative quarter. And that's why right now New York City cab drivers bearish on Apple. But you have this pent-up upgrade cycle, 270 million, that haven't upgraded in 4+ years, plus now AI coming to Cupertino with a $110 billion buyback. I mean, that's like going up against Brunson in the playoffs.
Good analogy. Mike, the concern in the back of my mind, Dan, and I'm guessing I'm not the only one, is this growing, I guess, Cold War between China and the West. That's spilling over into consumer behavior, and maybe people on the margin are not going to buy Apple products to the same degree they did in the past because of that. Did the numbers show that at all?
I think the doomsday scenarios never really came true this quarter. I mean, I think that was evident because, yeah, they have some geopolitical headwinds, the Huawei issues, but you build the best products in the world like they do. Consumers, whether they're in China, New Jersey, or wherever else, they're going to want iPhones.
All right, so at this developer conference, how do you think it's going to play out? Because it feels like they're always important to Apple, they're always important to the stock, but this one, because there may be this AI component, what would you like to see happen at this June get together?
Yeah, and Gurman's talked about this, but this is all focused on developers.
Yep.
So the big thing here is really them unveiling a foundational platform for developers where they're going to build AI apps within the App Store. And what that's really going to do, I mean, and Keene's talked about this a lot, but as AI comes to the consumer, it has to come through Apple. Till Apple dives into deep into the pool, AI, and then it all starts June 10th.
I feel like I'm doing an Ed Ludlow conversation. This is so non-Tom Keene. Dan Ives, so are Google and Apple frenemies right now? I mean, if they need the Google platform to make AI happen, forget about the regulation and the litigation. This weekend, they're going to chit-chat over an expensive latte out in Cupertino. Are they frenemies?
Oh, I'd say they're just actually friends. And to some extent, that's getting closer and closer because they need each other. You look, Google needs Apple just like Apple needs Google. And that's something when it comes to AI, what's made them more BFFs is actually Microsoft. Because as Microsoft has aggressively really led this, it's actually forced Apple and Google to look in the mirror and realize instead of enemies, they're actually friends.
The great thing about chatting with Dan Ives, Tom, is you can just go all over the place here. So I'm going to switch gears.
They're tearing him up on the live chat. Everybody wants to know where he got his shirt.
I mean,
they don't care about Apple. They just, did you get that at Lord and Taylor? That's what they want to know.
No, I got this one in Milan. This is like it's like a Paul Sweeney special, right, from Milan.
Oh my
goodness. John Tucker, can we have Dan Ives' life?
What if I mean, luxury for me is like LL Bean
at the thrift store.
Can you see Dan Ives and LL Bean?
No, of course not.
I can't.
No, they don't have the colors there.
Paul.
Hey, Dan, I'm looking at our good friends Tesla, stock down 30% here. How does that narrative need to change for Elon, over the next several quarters here to get this stock moving?
Yeah, look, I mean, obviously it's been a dark few quarters, but I think it all started with this last conference call in terms of turning it around. What I view as a sub $30,000 vehicle next year. They've had to make some difficult cost cuts, but now I think growth will start to return in China. That's the key. And then you look at this time ahead, it's really full self-driving autonomous. That vision now is starting to become something closer to reality. And that's the longer term Tesla story here.
Right.
Is that, they've been through this before. This is not the end of the Tesla growth story. It's still second, third inning.
Dan, I got to get some news out here. I mean, you're in the office. You go back to your house. I understand you're published at any moment. You're out at a 250 on Apple. Can we make some news here with a price lift? Can you give me 270 here on Bloomberg surveillance?
Well, what I will tell you, Tom, I think the AI story is worth $40 to $50 per share to the Apple story. And that is not being factored in here. Sentiment's negative, and I think we sit here a year from now, and that's going to be what I view as the game changer. It's the underestimation of Cook and Cupertino with AI.
Can I put a headline out? Ives of Milan.
Yeah,
says
sure.
Apple $300 a share. Did I hear that? Dan Ives, thank you, with Wedbush.
We'll have to wait for his note.
Yeah. I don't know what to say. I've never done that, folks. I've never done more touchy-feely with Dan Ives on Apple, but I think this AI thing a real mystery and a real debate. David Mericle is one of the toughest PhDs in the land under Greg Mankiw at Harvard with Goldman Sachs. David, thank you so much for joining. I want to get to immigration in a moment. How much algebra was there with Mankiw? I mean, I can't fathom the algebra rigor you had to put up with under Greg Mankiw.
Well, you do move from algebra to calculus when you stick around long.
Okay, well, David, thank you for being with us. Your essay on immigration is the debate of the moment for this nation. With your research at Goldman Sachs, can you say that immigration has moved the needle on our labor economy?
I think it's clearly had a mechanical impact on things like job growth and GDP growth. That part's pretty easy. More people, more entrants to the workforce, you can put more people to work, GDP can grow a little bit faster. Maybe the more contentious part is what impact all of this had on wage growth and inflation, where we saw a big increase at a time when immigration was extremely low because the borders were closed and fewer people were coming. Then we saw a big decline in wage growth and inflation when immigration surged, and it naturally raises the question, is there some link there? My take is it probably did play a modest and secondary role as one of several factors. But I don't think it was the main story. Normally, a lot of people, I think, quickly think of immigrants as, well, you have more workers, that should help to rebalance the labor market. Economist is, of course, going to point out, well, now that they've come to the U.S., they're consuming in the U.S. as well, not just producing in the U.S. So you've boosted both supply and demand. And under normal conditions, I'd probably say, as I think most people would say, that it would be a wash, that it doesn't matter too much, that when we economists and markets think about forecasting wage growth and inflation, this is just not something at the top of our list that we're considering. I do think this recent episode, though, was a little bit different, because if you remember back to the beginning of the immigration surge, we had probably the tightest peacetime labor market in the history of the United States. So I think under those unique circumstances, where you had a huge supply-demand imbalance in the labor market, and in particular, the low-wage part of the labor market was just red hot, generating really hot wage growth. Under those unique circumstances, I think it's fair to say that an influx of another million, mostly low-wage workers probably helped.
Paul?
So, David, given that backdrop here, how would you characterize the U.S. labor market? We've got, a headline of 3.9% unemployment, 3.8% unemployment. How do you characterize the labor market? How do you think the Fed views the U.S. labor market?
Yeah, I think basically we've restored the pre-pandemic balance, but things are a little bit more complicated. So if you look at a lot of different measures of how tight the labor market is, the unemployment rate, our jobs workers gap, survey-based measures, many other data points, and you just average all of them, the average is basically where it was in 2019, down a long way from 2022. I think the Fed would say that's ideal. In 2019, we kind of had in retrospect, the best of all possible worlds, abundant job opportunities, low unemployment, but we didn't have an inflation problem. By 2022, we'd probably overshot. 2019 was one of the tightest labor markets in history. 2022 was kind of drastically tighter. And I think most Fed officials concluded that's not the right place to be, especially when you have a big inflation problem. At this point, though, I think we can kind of say now, and in fact, we could say by last fall, that we have restored that pre-pandemic balance. The reason I say it's more complicated is that there's more dispersion among these indicators. They tell a less consistent story. And that means you can be a little bit less confident about where we are than if they all told exactly the same story.
Hey, David, I'm looking at your team's note from early April. You talk about GDP forecasts a little bit higher than consensus, PCE inflation falling pretty significantly, leading maybe the Fed to cut maybe as many as 3 times this year. Is that still the Goldman Sachs call?
We think twice at this point, once in July, once in November. And, I'd be the first to acknowledge that decision is going to be very, very sensitive to very small surprises on the inflation data, which, I don't think anyone can be certain about.
When you look at the, with you and Jan Hatzius having to put together a call, Peter Oppenheimer over in London, you put together a call. Do you have not certitude, but do you have a confidence into the summer and into the end of the year? Or are you basically flying blind till you do your next conference call to figure out what the view is?
Well, there's always some interplay between the economic side and the market side. We try to incorporate that through our financial conditions index framework. And so it's very helpful to be able to work with our strategists to get some sense of how that impulse from changes in financial conditions broadly might matter for our economic forecast.
So where's your nominal GDP call now? That's been one of our themes this morning is a lot of people looking at resilient rates, figuring a resilient inflation, and that, we may not get nominal GDP under 4%, or can you be more cautious?
Yeah, so we would have it this year at a little bit over 5%, but by the end of 2025, approaching that 4% number you mentioned.
Wow.
Yeah, interesting. Hey, so David, talk to us about the consumer here, the U.S. consumer. What's your call here? I know we're going to hear from Walmart and a bunch of the other retailers in the coming week or so, and we'll get a better handle on it. But how do you guys think about the U.S. consumer?
Sure. Look, I think there's been a bit of a disconnect between how we and other people looking at macro data would think about this and how people who have been kind of focused on some of these company reports might think about it. Our take is a little bit more optimistic. I think of this as a pretty simple, straightforward story. Basically, the 2023 story, just in watered down form. What I mean by that is, there was a lot of gloominess in 2023 too, but we looked at the data and we thought real income is going to grow at a pretty robust pace. People's spending power is growing robustly because wages are growing faster than inflation. We're putting a lot of people to work. And there are a couple other sources of income, like interest income and some government transfers that we kind of knew were coming. And if your income's rising quickly and household balance sheets are basically the strongest in history, then the natural assumption, I think, is that consumption keeps growing at a healthy pace. Now, this year, we're not going to put 250,000 people to work per month. We just don't have that many workers. So the economy's income growth is going to slow. Everything's going to slow, including consumption. But we're at about 2.5%. A little bit stronger than I think is sustainable in the long run, but not a blowout number.
David, got to run. David Mericle, thank you so much for that brief on Goldman Sachs. And to me, the headline there is a sprightly nominal GDP, even out into next year. Long ago and far away, you had to read Robert Lacey, I believe it was. 3 or 4 books on Saudi Arabia. You had to read, various others out of England. And then there was a more modern book by Ellen Wald, Saudi Inc. And all I know is right now my head is spinning simply because time has moved on, and I'm not sure the royal family of Saudi Arabia is the same as the royal family that I think I knew of Saudi Arabia, or at least what David Lean gave us in Lawrence of Arabia. Ellen Wald joins us. The book is the 1-volume Saudi Inc. She's with the Atlantic Council on Energy. Ellen, just as simple as I can put it, who is the new royal family of Saudi Arabia, and are they our ally?
That's a really good question. I would say in some ways they're very different, but in other ways they're very much the same. Are they our ally? I think the answer to that is no. I would say they're probably more of a strategic partner, but I think that Saudi Arabia sees America as their ally, and that can complicate things a lot.
So I know there's a deal in the works between the U.S. and Saudi, encompassing a lot of technological issues, a lot of economic issues. Can you summarize kind of what the discussions are between the U.S. and the Saudis right now?
Yeah, this was the really kind of big story earlier in the week that this U.S.-Saudi kind of weapons, diplomatic, economic deal is nearing the finish line. And essentially, it seems like the U.S.'s goal is really to limit Chinese influence in terms of Saudi technologies. So they don't want Saudi Arabia using Chinese technology in their sensitive networks and things like that. So the U.S. is going to provide, as they call, investments in AI, quantum computing, and they're also...
Ellen, I don't mean to interrupt, but this is the first thing I dealt with this morning. So basically, we want to tell Saudi Arabia what to do with Chinese technology. Do we want to tell them they can't drive Chinese electric vehicles?
That's a really good question. I think that they'd probably rather that Saudis drive a Rivian, Lucid vehicles, which the PIF has a big stake in that company. It's really unlikely that people in Saudi Arabia are going to be driving EVs, considering that they can drive really long distances.
I even got that right on the Ellen Wald test.
Exactly. All right, so Ellen, let's talk about broaden out to kind of the global energy markets here. We've had both WTI and Brent crude pull back a little bit from recent highs here. What's your kind of sense of where oil may be heading here in the near future?
Yeah, this is a really good question, and does in some respects depend on Saudi Arabia. It does seem like there's some economic weaknesses, some indications of economic weaknesses. We're looking at a lot of kind of some weaknesses in diesel and middle distillates, which can be a troubling economic sign in the past. That has definitely signaled oncoming economic weakness. But on the other hand, it may not. We're looking at strong summer demand, though I think that once summer demand, kind of rolls through, it's really quite questionable what we're going to be seeing in the fall globally. Obviously, China matters a lot, and it's kind of unclear. There are signs of weaknesses, but then again, you never know what the Chinese government is going to do, and they're still importing a lot of oil. When it comes to kind of oil prices going up and down, I think we're seeing a pullback from a lot of the risk premium that had come on back when it looked like Iran and Israel might kind of destroy each other. I think that traders really thought there was a real possibility of war, but when you look at kind of the facts on the ground, neither of those countries is equipped to fight a war against each other at all. So I think it was much more likely that we were going to see a kind of a cooling of tensions as opposed to continuing escalation.
So, Ellen, I guess the OPEC next meeting around June 1st. I'm just not sure how much we should all pay attention to OPEC these days. How are you going to approach it?
That's a good point, especially because when I think when OPEC is doing its job well, we don't really need to pay attention to it because their job is really to keep prices stable. And actually, prices have been fairly stable. They've really kept a lid on production. They've managed to, to kind of keep everyone in line. But I do think that this U.S.-Saudi deal could have some impact because there is a sense that if it goes through, the Biden administration is going to be expecting the Saudis to increase production so that oil prices come down by the time November rolls around. And I'm not sure that the Saudis are really prepared or interested in doing that unless they get this full deal. So it's going to be quite interesting, I think. They might increase production in H2 or at least for one quarter if things get really tight for the summer.
I mean, Ellen, you don't do a market call. I get it. We're not doing market economics. We're not trying to game out a barrel of oil. But we've gone 90 to 80, as you say. Do you have in your head a geopolitics, a dynamic of supply and demand that gets you to $70 Brent, or dare I say $60 Brent?
I think that's really tough in the current inflationary area where we are, because we always think of oil prices as causing inflation, but inflation also acts on oil prices. So we're talking about rising costs in all aspects of oil production. Plus, we've now got a very much consolidated U.S. shale industry, which is not going to re-enter this kind of produce at all costs time. So I really don't think that unless we see some kind of economic collapse or recession, I don't think that there are the conditions in terms of supply to put us back into that 60 barrel range.
Just for a moment there, Ellen Wald sounded like Emery Send. I mean, it's just great. Market oilnomics with Ellen Wald. Ellen, thank you so much. We look forward to the next volume of Saudi Inc. It's due, to say the least, with all the changes. Ellen Wald with the Atlantic Council, a wonderful book, really can't say enough, and also Transversal Consulting founder.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern. from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.